Right, so this absolute bottom-feeding gobshite has tried to take aim at my pal Gary of Gary Economics.
Saw some guy, I don't know his name. He was on Twitter begging for the government to tax us more.
I was going to talk to you about him. Are you on about Gary Economics?
Firstly, man, this is easy. Who's more qualified on the subject of economics and taxation? Gary, a former successful city trader, author, with a degree in mathematics and economics from the London School of Economics, or the arch misogynist for pay Tate. Easy, right? Gary on economics. Tate maybe on the subject of whether pimping's easy or not. Tate might disagree, but that can be written off as a symptom of the combined afflictions of too many blows to the head as a kickboxer and a chronic case of narcissistic personality disorder. Tate will also know more about the culinary standards in Romanian jail and what you can get for a couple of packs of smokes. Tate and his brother Tristan were arrested in Romania in December 2022 on charges including human trafficking, rape and forming an organised crime group. He spent months in jail and under house arrest. Legal proceedings are still active. So in summary, Tate is about as good for your teenage son's mind as a hit of spice and an untreated case of syphilis. In fact, if the nation's collective consciousness was a body, Tate would literally be the societal equivalent of an untreated case of syphilis. And like my compatriot Alexander Fleming, I've got the treatment. Unsurprisingly, the simpleton has entirely oversimplified Gary's position on taxation. He is not begging for the government to tax us more. Not normal working people. Not even a tax on higher earners or cash in the bank. What Gary's an advocate of is taxation on extreme wealth, on assets and inheritance, which is some of the least taxed type of wealth or income in the current UK tax system, particularly those at the very top of society. Huge asset owners. An example he often gives is the Duke of Westminster, who inherited £10 billion tax-free. I'm the same, I'm all for meritocracy, particularly those like Gary or the thousands of other folk in Britain who go from a working class upbringing onto highly successful careers. But the thing is, you usually find folk like that want to pay tax. Well, maybe apart from that wank who owns Pimlico Plumbers. As if you were brought up with people in poverty, saw the social problems that kind of struggle brings, and saw friends or maybe former classmates who, in another life, had plenty of potential, fall through the plethora of extra hurdles the working class have to navigate in life. You're likely to be sympathetic towards the struggle and the catastrophic damage the accelerating inequality in our society or things like austerity do to working class people and their kids. And that's the reality the current Labour Chancellor Rachel Reeves is facing. Money was already tight at the Treasury, and now with the economic chaos launched in the world following Trump's tariff announcements and the ensuing trade wars, the UK is currently facing a blanket 10% tariff on all imports from the US, our second biggest trading partner, which looks set to wipe out the £9.9 billion fiscal headroom Reeves was banking on. And with the self-imposed borrowing restrictions seemingly non-negotiable, tax rises or further austerity look to be the Chancellor's only options in the quest to start to fix the damage done by 14 years of Tory vandalism in our public services and way of life. Now, to be fair to Reeves, she has just announced that there will be no rises to income tax or national insurance for workers, sticking to Labour's manifesto pledge. But that not only leaves more spending cuts or tax increases elsewhere. Now, as austerity is about as popular with the electorate as Andrew Tate at a Sweet 16 party, the only real viable options in terms of government cuts may be more efficiency type measures within the civil service. I'd expect to see more stuff on the implementation of AI, for example, as the UK currently only sits 7th in the UN's e-government survey, and so there is headroom there. But there are still plenty of options to raise HMRC's take. Now, rises to corporation tax or anything else in the realm of business seems unlikely, given the government's desire to kickstart the economy and deliver growth. Business has already taken on the additional cost of the increased national insurer contribution, and given the opportunity now presented by the additional barriers to trade in the US, the business-friendly face of Starmerism isn't going anywhere. Trade deals with the US and an improved deal with the EU, maybe even a Norway option or our own bespoke deal to regain access to the single market, are also likely avenues for growth, no matter what Labour are saying now about pursuing it. Money talks, and our current restricted access to the world's largest free trade zone is certainly costing us plenty of that. But what that realistically leaves Reeves in terms of taxation is the following: increases to capital gains tax, inheritance tax, and the Tory pension tax-free loopholes. Let's take a look at these in some more detail. So here's what Labour have actually done in terms of capital gains tax since getting into government. Firstly, they've raised the rates. If you're a basic rate taxpayer, you now have to pay 18% instead of 10%. If you're a higher rate taxpayer, you're paying 24% instead of 20%. And if you're a trustee or managing someone's estate, same deal, 24%. Secondly, they've cut the annual tax-free allowance. It used to be £6,000 a year, now it's down to £3,000. So a lot more is getting taxed. Third, they started tightening up private equity loopholes. Carried interest, the big earnings for investment managers, is getting taxed at 32% now, and will move to the full income tax rates next year. So it is tougher than it was, and they're pulling in more money as a result. But a more progressive look at it think that Labour doesn't go far enough. There's a lot of people saying, why not tax capital gains exactly the same as income? Why still have special reliefs that basically let millionaires pay less tax on business sales? And why give a tax-free allowance every year to the richest instead of making it targeted? And also, why wait until next year to fix private equity tax dodges when it could be done now? They may also have a look at the annual tax-free allowance on capital gains, and they do have the option to remove it completely. The bottom line is Labour moved things in the right direction, but if you believe in real tax fairness, there's still a lot to do. So what about inheritance tax? Well, Labour have always made it clear that they do not favour what they call intergenerational inequality. They view inheritance tax as a mean to recover some of this inherited wealth to redistribute it across generations. So what has Labour done so far? Firstly, they've shifted to residency-based taxation. Previously, inheritance tax was based on domicile. Now it's based on residency. If you've lived in the UK for 10 years, your worldwide assets are subject to inheritance tax. And this liability continues for 10 years after you leave the UK as well. There's also been agricultural and business property relief changes. From April 2026, 100% relief on agricultural and business assets is capped at £1 million. Any value above that gets only 50% relief. There's also been the inclusion of pensions in inheritance tax starting from 2027. Unused pension funds will be included in the deceased estate for inheritance tax purposes, potentially subjecting them to a 40% tax rate above the nil rate band. The thresholds have also been frozen. The nil rate band up to £325,000 and residence nil rate band of £175,000 are frozen until 2030, meaning more estates may become liable for inheritance tax as property values rise. Now, what more could be done? The first thing to look at would be to potentially raise the main 40% tax rate to 45 or maybe even 55 for billionaires. They could also scrap the £175,000 home allowance that mainly helps rich homeowners. They could make lifetime gifts taxable right away, so no more waiting 7 years. Or shorten that 7-year window, maybe down to 5 years. There's also option for a full alignment of inheritance tax with income tax, taxing all forms of income and inheritance at the same rates to ensure fairness, as well as abolishing or reforming reliefs. Critics argue that reliefs like business property reliefs are exploited by the wealthy and should be reformed or removed. They could also implement a lifetime gift allowance. Introducing a cap on the amount you can gift tax-free over a lifetime prevents huge transfers of wealth going untaxed. And also progressive tax rates, applying higher inheritance tax rates to larger estates to reduce wealth inequality. So how could this work? Right now in the UK, inheritance tax works like this. Everyone gets a tax-free allowance of £325,000 in the nil rate band. If you own a home and leave it to children or grandchildren, you get an extra £175,000, the residence nil rate band. Above those thresholds, the flat rate tax is 40%, no matter if your estate is worth £400,000 or £40 million. Progressive arguments say that this flat rate 40% is unfair because it treats moderately wealthy families the same as super rich ones. Someone inheriting a modest family home and some savings pays the same tax rate as someone inheriting a 50 million mansion. So what could be done? They could introduce progressive tax rates, just like with income tax. This would mean that very large estates pay a higher percentage. Other progressive tweaks that could be include a much higher exemption for passing on small businesses or farms, but only if their heirs continue to run them for a certain number of years after. As well as a tightening of loopholes where wealthy families use trusts and offshore structures to hide assets. Ultimately, the big goal is to stop inherited wealth from stacking up generation after generation. Internationally, countries like Belgium and Spain and Japan have already implemented progressive inheritance tax regimes. Japan's top inheritance tax rate is 55%. So what's Labour done so far in terms of pensions? Under the old rules, unused pension pots were often passed down completely tax-free if you died before 75. Labour has announced this loophole is ending. From 2027, unused pensions will be included in your estate for inheritance tax purposes. That means pensions will now get taxed at 40%, or whatever inheritance tax rate applies to the estate when passed on. Why? Because wealthy individuals were using pensions not to fund retirement, but to pass on large sums tax-free, essentially turning pensions into inheritance vehicles. Critics said this unfairly helped the very wealthy who didn't even need their pension for retirement. And ultimately, it sticks to the principle that pensions should be for retirement income, not inheritance planning. Labour's move here is seen as a big progressive win, closing a loophole that cost the Treasury billions. But what more could Labour do? The tax-free lump sum. Right now when you take your pension, you can take out 25% tax-free up to £268,000. But progressive arguments say that a tax-free perk mainly benefits the richest savers. So there's pressure to firstly cap it or reduce it from 25%. Or scrap it entirely. There's also the lifetime allowance. Critics argued that the very large pensions should still face limits to stop mega pensions growing unchecked. The annual limit you can contribute to a pension and still get tax relief is £60,000 remains untouched. There's still more that could be done to make pensions less of a tax shelter for the wealthy, especially targeting the 25% tax-free lump sum next. Beyond this, Labour do have some other options. Firstly, they would be ending nom-dom status entirely. They could look at second homes and empty homes taxes. Essentially an extra tax for people owning second homes or leaving properties empty long term. It's clear that the working and middle classes in this country have been hit hard enough. The highest tax burden since World War II, 14 years of Tory austerity. They're already squeezed to the max, and there's little room for more. There is, however, a huge opportunity for Labour to now look at the issues of the rising inequality in the country and ultimately produce a fairer and more equitable tax system that can pay for the services that we all need.